Hey everyone, welcome back to our channel, Investo Time. If you're new here, make sure to hit that subscribe button and turn on notifications to stay updated on the latest financial insights. Today, we're diving into a topic that's on everyone's mind: the skyrocketing demand for silver and why your gold and silver could soon become priceless. Let's break it down.
Inflation is now near term, close to the lowest levels we've seen in that survey. So I think Americans do believe inflation's under control. And a recent, I think it was last week, Axios survey showed that when people are asked about how they feel about their own finances, over 60% said they consider them good.
Treasury Secretary Yellen doesn't understand why consumers aren't happier about how much slower inflation is growing. Wow. But this is how it's impacted in consumer sentiment, which they've got to track the sentiment and the expectations, because it's not what's real that counts. This was Henry Kissinger. It's not what's true that counts. It's what is perceived to be true that counts. Because this whole thing is being held together by confidence. The consumer is losing confidence. That's the last layer left. When that's done, you better have your gold and silver. That's all I can say.
Today, we're tackling a crucial issue affecting us all: the role of consumers in the economy amid rising inflation. Did you know that your spending habits are essential for keeping stock prices stable worldwide? The world is closely watching, and so are we. With the Federal Reserve's preferred inflation gauge on the rise and inflation persisting, how are we managing to keep spending? We'll break it down for you, from essentials like food and energy to the alarming drop in savings rates. As the labor market cools, purchasing power is diminishing despite reports of wage increases. Are we really better off? Spoiler alert: inflation is outpacing income growth, tightening our wallets more than ever. Stick around as Lynette Zang dives into these pressing issues and uncovers the real trends behind the numbers. We'll share clips from Lynette Zang's latest interview. Thanks for watching and enjoy the video.
I'm Lynette Zang, founder and CEO of Zang Enterprises. And you guys, we're back with another video. We have to pay attention to what's happening with the consumer, because the whole world is counting on the consumer keeping all of these stock prices elevated in the income, blah, blah, blah. So let's go in and check, because the Fed's favored price gauge rises at a mild pace. Spending holds up. So that means that prices are going up, inflation is still there, but yet people keep spending. Well, you have to keep spending on food and energy and those necessities of life. But let's just take a look at this, because this is the underlying inflation gauge, and they want to lower the rate. So they want you to think that inflation is getting under control. That means just slowing down its pace of rise. But here's their inflation gauge, and guess what we see here? It's going up, isn't it? Yes, it is. As the savings rate is falling, people are being forced to spend more. Well, if they don't have any money to buy with, they must be using something else, and we're going to talk about that. But signs of cooling in the labor market are starting to translate into less purchasing power. What does that mean? That means that incomes are rising even slower than they were before, but the prices keep on climbing, right? The real trend is in purchasing power, and we're losing it officially. Wages and salaries rose 0.3% in June, half the prior month's pace on an inflation-adjusted basis. How convenient. Disposable income growth slowed to 0.1%. That means basically it did absolutely nothing. Even though incomes grew, inflation grew faster. Share of U.S. credit cards past due climbs to the highest level since 2012. Look at this. This is reflecting rising consumer pain. That's a problem if you're continuing to want the consumers to consume. Because frankly, unlike central banks' ability to print as much money as they want to, consumers have limits. But in every sector, whether it's 30 days, 60 days, or 90 days, those delinquencies are rising very, very rapidly now. What's going to stop that? Especially since, hey, we're not even in a recession. I'll bet you there would be people out there that completely disagree that they are indeed in a recession. And at the same time, because, after all, Treasury Secretary Yellen doesn't understand why consumers aren't happier about how much slower inflation is growing. Wow. But this is how it's impacted in consumer sentiment, which they've got to track the sentiment and the expectations, because it's not what's real that counts. This was Henry Kissinger. It's not what's true that counts. It's what is perceived to be true that counts. So as long as the consumer thinks that the government and the central banks have this under control, they can just keep turning those screws, baby. But it was a huge slide. The University of Michigan gauge slid to 66.4, and not that long ago, it was at 101.4. That is the sentiment. That is the likelihood of them going and spending, or consumers spending money on extra things other than just necessities. Look at that huge drop. What do you think that means? Because this whole thing is being held together by confidence. The consumer is losing confidence. That's the last layer left. When that's done, you better have your gold and silver. That's all I can say, as well as your food, water, energy, security, barterability, wealth preservation, community, arguably the most important part, and shelter. These are the things that we need to sustain a reasonable standard of living. Stop hesitating. Stop procrastinating. Get it done. To set up your strategy, it is critically important. And frankly, we do not filter the questions. And I'm not going to take anything with bigotry, but other than that, you can ask me anything. Together, I know, as a community, we can make a positive difference. Let's come together and do that. And until next we meet, please be safe out there. Bye-bye.
And there you have it. Lynette Zang has expertly unpacked the intricate effects of inflation on our daily lives, from the strain on consumer spending to the troubling trends in purchasing power. It's clear that staying informed is more crucial than ever. Understanding these economic shifts helps us make better decisions. Share your thoughts in the comments below. And if this video resonates with you, join our community by subscribing to our channel and clicking the bell icon for notifications. Thanks for being a part of our community.